This is episode 161 of Zen and the Art of Real Estate Investing with my guest, Mike Roeder. Mike is the co-founder and managing partner at Granite Towers Equity Group. He oversees, this is a lot, operations, acquisitions, investor relations, and asset management. Mike is also the co-host of the podcast, Keeping It Real Estate, and the co-author of 4 Steps to Successful Passive Investing. Mike, welcome to the show.
Thanks so much for having me on today, Jonathan. I really appreciate it. Looking forward to digging into the weeds.
Yeah, exactly. The weeds are what we've been through. And you actually got started with single families, but have now gone large scale with multi. But when you think back, when was the first time that you remember real estate being something that you thought could play a role in your life in the future?
Yeah, that's a great question. So like you said, I got started in the single family rental space in central Minnesota. So I currently live a little bit northwest of Minneapolis in Minnesota. And I was 20 years old, was dating now my wife. She's been my wife for 15 years, but we were dating. We decided to get a house near campus, 4-bedroom house. We were pretty young, didn't have a lot of money saved up. So we house hacked that house.
Yeah.
We went in there, we bought an old house. It was built in 1924, rented out 3 of the bedrooms to our buddies. We lived in one of the bedrooms. And that's the point where we fell in love with, being landlords and also cash flow that residential real estate or real estate in general can provide.
When did you realize the transition and how you could make it that it would eventually be more profitable that way?
Yeah, great question. So after a couple of years of owning those small, multifamily deals, we ended up deciding that we were going to go the syndication route. So we were going to start raising capital from limited partners that wanted to invest in multifamily, but maybe they didn't have the time or the the knowledge to do so. And so at that point, we joined a couple mentorship groups. We started going to other markets, educating ourselves on what market would be the best to invest in. And that's really where we found Dallas-Fort Worth, market, also Nashville. And we've invested in a couple other markets as well. And we started to, diversify a little bit outside of our hometown and what we knew in Minnesota.
Yeah. And that also seems to scale from, I guess, a kind of mom and pop hometown business to something that's larger that fits syndication. But I've talked to so many people who started smaller, obviously got into syndication. And a lot of them get to that point when they're ready to take other people's money. So I want to know what you're going to say is that you start doing well on those other ones, or it looks like you're in motion. And then the friends just start saying, hey, I'd like to do that, but I don't have the time. Is that how the first kind of idea bulb popped up for you guys?
That's exactly right. We were doing pretty well with those first few multifamily deals. They were cash flowing nicely. And we had a lot of individuals asking us how they could get involved. So that's where we, jumped into the syndication realm. And like you said, you're dealing with other people's money. So it's a lot more responsibility, and you just have to make sure that you're doing your due diligence and that, putting your full heart into it, and that you have time to actually asset manage, because you're dealing with other people's money, which is so much more important than your own.
Where were you able to find mentors and these things that could really help you go much faster and more carefully, I would say?
Yep. So for us, my business partner, Dan Breezy, he had joined, I think 6 different mentorship groups. And
he really went in.
Yeah. He went out a lot of different groups. And really after he had done that, he started to talk around and hear about, what multifamily mentorship group was really successful and was, putting out successful results for the people that were a part of it. So that's really how we found the mentorship group that we partnered up with, down in Dallas-Fort Worth. And, I would just say, research it, try to talk to other people that are in those groups, and you can pretty quickly, weed out a lot of groups and figure out, the 3, 4, or 5 that are being really successful. And you want to make sure that it fits your niche as well. So if you're, in mobile homes, or you're in multifamily, or you're industrial, you want to make sure it's a group that's really focused on that niche. Otherwise, it's just going to be general information that you're getting.
For someone now who wants to invest in a syndication, what are some things that you guys talk about in the 4 Step to Successful Passive Investing that may help people figure out where they should invest, or even how to get into syndication on either end? Because I think a lot of people get hung up on it. And most of us thought it was a scam before we realized, hey, this is actually pretty awesome.
Yeah. So I'll go through the steps. Number one is get to know, like, and trust the general partner. So
Yeah, that's great.
if you're listening to podcasts like this, if you're on Bigger Pockets, what have you, you should be able to find, a decent amount of general partners that are doing deals and that have some sort of track record, but you need to do your due diligence. So ask for referrals, talk to other individuals that have invested with this group, get to know them, understand what their communication is like, how their monthly updates look like. Listen to their webinars and get to
Yeah.
know, their structure and their team and why they like the submarket that they're in. All of that's critically important. Step two, research the market, like I said before. So just make sure that you're well aware of what market you're investing in and, why it's beneficial to invest in that market. And if there's any red flags, there's plenty of investment opportunities out there.
Yeah.
So if you're getting that gut feel where you're like, gosh, I just don't know about this, just hold off and wait for the next opportunity.
Yeah.
Step three, analyze the property. Don't be afraid to ask for financials, for information if the general partnership team isn't providing that. And, educate yourself. Make sure that you know what you're looking at. So understand the rent growth and the vacancy, the other income, and how much they're pushing income,
Yeah.
type of debt they have on the property. That's critically
Yeah.
important.
Yeah.
And again,
Especially now.
it is.
Yeah.
It's extremely important. And that's, you have a lot of investors out there right now, general partners that are in hot water because they put, the incorrect debt in place or they just didn't structure it properly. So
Yeah.
that's super important. And then know the team, just know who's behind the curtain. One of the important questions that I like to ask when I'm doing a passive investment is, are you doing this full time? Do you have enough time to properly asset manage the deal? Because there's a lot of syndicators out there where, they might be working 60, 70, 80 hours a week on their corporate career.
Yeah.
And they're trying to do the syndication on the side and they just don't have the time to properly asset manage. And if you just let the third party property management company go and let them do their thing, your investment is going to suffer.